That's the best thing for you. Because I have to explain everything before the class is over. Stop writing, please. Good morning. We continue with business ownership. Yesterday we talked about a company. I said a company, when I'm talking, don't write. A company is an incorporated business. And it becomes an incorporated business because it has presented its memorandum of association, the article of association, to the registrar of companies, CRO, which at the end of it, the registrar of company accepted it and it becomes a business. So the point about having a business is that you need to present your documents to the registrar of company, which represents the government, and on its approval, you can start having your own company. So we have different types of companies. We have private limited companies and public limited companies. But today we want to talk about private limited company. A private limited company is a company that is owned by shareholders with limited liability. It is owned by shareholders with limited liability. That is what a private limited company is. And we have three types of private limited company. We have the limited company themselves, which is LTD, which ends with LTD. We have the designated activity company, DAC, and we have company limited by guarantee, CLG. These are the three types of business, private business we have. I told you to put your pen down, right? Your pen down. So for limited, this is owned by friends and family. A shareholder liability is limited to the numbers of shares they own. But for a private limited company that ends with LTD, that means, let's say, ABC Limited. This is the name of the company. So the owners of these companies are friends and family. What do I call it? Friends and family. That's a private limited company. For the designated activity company, they are also private limited company, but what they do is specific. Or if they are schools, they continue to be school. They cannot diversify. Please, what I'm saying here, you listen very well. A company that must operate within a specific business activity outlined in its constitution. So in its constitution, it simply means the document it has presented to the CRO, it cannot deviate from it. So if it's a school, it continues to be a school. It cannot be a conglomerate. A conglomerate business is a business that can be diversified. You can have a school, have a university, have a hospital, whatever you have. That is conglomerate. But when it comes to designated activity company, these companies cannot deviate from their specific duty. So they cannot do other things except what they do. Do you understand DAC here? This business can do whatever they like. Here, if you are a school, you can continue to be a school. You cannot have a hospital under the same business. That is designated activity of company. Do you understand that?
Yes.
DSC. And the last one is company limited by guarantee. CLG are not for profit making organizations. They don't make profit. So they don't have shareholders, they have members. Do you understand CLG here? CLG is a charitable organization. They do not make profit. Their own purpose, their objective is not to make profit. They are not for profit. So they don't have shareholders. They have shareholders, they don't have shareholders. Do we get it?
Yes.
But they are private limited companies. Any question about this?
No.
Now that takes us to the formation, the setting up of a business like this. The formation. Founders must present the article of association, which is AOA, and MOA. This has to be presented to the registrar of company, which the registrar of company has to approve before it starts operating. So without that, you cannot start a private limited company. That's why when you look at the name of this school, in the name of the school, there's a registered number with the school. That is the number that has been assigned to the company. Do you understand? So the formation is that the founders, those ones who establish it, must present their MOA and the AOA to the registrar of companies for approval before they start operating. How do they is liability? Liability is about the debt of the business. What is about the debt of the business? It is limited. So whatever happens to the business does not affect the owners. Limited means there's difference between the owners of the business and the business. They are separate. So whatever happens to the business does not affect the owners of the business. Limited liability. Do you understand liability here?
Yes.
Okay. The third one, finance. Finance is about how they raise cash. There are three private businesses here. Here, for companies, they raise capital through the sales of shares. They sell shares to raise capital. Can raise finance through issue of shares. They sell shares to raise money. For DAC, finance but limited to authorized capital. What is an authorized capital? An authorized capital is the maximum amount of shares you can sell. So for DAC, they can only sell the numbers of shares the government allows them to sell. For private limited company, they can sell as much as they want within the friends and family. This is a specific business. So whatever they do, everything has to be specific. They don't do more than what the government wants them to do. Do we understand the second one? In terms of finance. Do we understand or not?
Yes.
The third one is the CLG. I told you CLG is like a charitable organization. They are not making profit. So most of their finance comes through donation. Do we understand?
Yes.
This one, they sell shares. These ones, the amount of shares they could sell is through the authorized capital. And for these ones, the kind of finance they raise is through donation. Is it clear? We move on to control. How are decisions being made? Decision making. For the private limited company, for this one, decisions are made by the directors of the company, which are the owners of the company. For private limited companies, the owners are the directors and they are the one in charge of making decisions. Do we understand this one? The other one, determined by specific business activity. Because it's a specific business, whatever decisions they have to make, it is based on that activity. Here, the owners are the directors are the one in charge of decision making. This decision making is based on specific business activity. And for this, because they are not shareholders, they are members, the members will choose those that will be in charge of decision making. The owners make decisions. Decisions is based on specific activity. Members decide on who to elect, who to trust with decision making. Do we understand control here?
Yes.
Separate legal identity, yes. It is separate. The owners are different from the business. The owners are different from the business. The owners are different from... They don't even have owners. They only have members. Yes. Do we get it?
Yes.
Any question about separate legal identity? No. Regulatory requirements. Whatever they do, everything has to be published to the government. Their financial statement has to be published to the government. Do we understand that? The next one is dissolution. How can this business stop to be in operation? For this, it can be stopped by the owners. They come together to start the business, right? They can also come together to end the business or court order. The court might stop them the court might seize them from operations. So dissolution is about how the business will stop. For a private limited company, it could stop among members. They could decide to stop the business or a court order. Do we understand this? And for the other one, DAC, it is based on the Memorandum of Association, the MOA. So whatever is being stated on their operations can stop them from operating. And for the last one, for CLG, it can be dissolved by the members. Members put them together, the members can end it. Do we understand the solution here?
Yes.
So these are ways in which private limited companies can be formed and be dissolved. Any question up to here?
No.
And the last one is continuity of existence. What does continuity of existence mean? Continuity of existence means a change of ownership. If there's a change of ownership, the business will continue to be in operation. Unlike a sole trader or partnership. For a sole trader and partnership, they don't have continuity of existence. If one of the owners stops, the business stops. But here, if one of the owners stops, the business continues. If they sell the business to someone else, the business will still continue. That is continuity of existence. All incorporated businesses have continuity of existence, which simply means irrespective of who you are within the group, as soon you choose to leave or you choose to quit, the others will continue the business. The business does not end because of you. That is continuity of existence. Do we get it?
Yeah.
Now, what are the advantages and disadvantages of private limited company? The first one, access to capital. Why is there access to capital? There's access to capital because a lot of people are in the business. So there's a lot of money that can be invested into the business. Unlike sole trader and partnership. Sole trader, it is only your money that you can put into the business. Partnership is restricted to 20 people. But for private limited company, we're talking about maybe 50 people or more. So there's access to money, capital. Do we understand? Is an advantage or not? Is it an advantage or not? Limited liability, which simply means whatever happens to the business does not affect the owners of the business. That's an advantage. So it simply means you can only lose whatever you have in the business, not your personal wealth. That is limited liability. It's an advantage or not? Is it an advantage or not? Yes. It is an advantage because the only thing you can lose is what you have put into the business. Every other thing you can't. Unlike a partnership and sole trader. In partnership and sole trader, the business is unlimited liability, which simply means you can as well lose your personal wealth if you have to pay, if the business is losing. The third one, tax advances. The government always wants to encourage private limited companies. As a result of that, government gives them tax relief. Government reduces their taxes, and that increases their profits. Remember, tax is part of our cost of production. So there's inverse relationship between tax and profit. If your tax is increasing, your profit drops. If your tax is dropping, your profit increases. So if government is reducing the tax, it simply means they will be making more profit. So that's an advantage for them. Do you understand? Then what are the problems about setting up this kind of business? Number one, complicated and expensive. To set up this business, it takes time. And whatever takes time takes money. Whatever takes time takes what? Money. So you need to present the AOA, the MOA, then you have to wait for the registrar of companies to accept it. So it takes time. The first one, do we get it? That's the problem. The second one, share of profit. Unlike a sole trader, your profit is all to you. Partnership within the 20 people. Even share of profit in partnership is a problem because you have to share the profit within people. It's a problem here because your return on investment reduces. You might have put so much money into the business and your profit is just little. Share of profit is a problem. You understand how share of profit is a problem here? Profit is not the problem. Share of profit is the problem because the share of profit is the return on your investment, which simply means you would have put certain huge amount of money into the business, but you are getting less in return. That is the problem there. Do we get it? And the last one, lack of confidentiality. Why is there lack of confidentiality? There's lack of confidentiality because whatever you do, the whole world must know. You must publish your financial statements. So all your activities must be known to the public. There's no confidentiality. Unlike a sole trader and partnership, a sole trader would not need to publish his account. Whatever he or she makes, it's his own business. Nobody cares. But for a private limited company, not only the government, the whole world wants to know how you run the business. So there's lack of confidentiality. So that ends private limited company. Do we have any question?
No.
Please do ask now. Any question? Any question? Okay.
The last point.
Lack of confidentiality, yes. It simply means there's nothing you can keep. Whatever you do is being exposed to the world. You have to show it to the world. Publish. You have to publish your financial statement. And that is your statement, your financial statement is your strength. The money you make. So the whole world must know the money you make. So that means there's no confidentiality. Unlike a sole trader and partnership, you keep it to yourself.
Who's the main people?
Is that a question? Is it clear now?